I'm going to be discussing a lot of oil and gas news today. JP Morgan Chase is estimating $136 oil. Goldman Sachs, $140 oil. Trading giant Trafigura is saying $150 oil. Bank of America is estimating $140 oil. And OPEC member of the UAE is saying that we're nowhere near peak highs. I want to talk about a lot of oil and gas news, why oil prices are expected to stay high. I'm Sean Pruitt, president of Kingdom Exploration. We're going to watch a video here, and I'm going to weigh in on it.
Concerns, I have to say.
Hey, Paul, it's Tim. I think Brent or crude, depending on what you're looking at, is going to 140 at least. And I hear this whole dynamic with Russia in terms of their ability to produce right now really falling off. So swing capacity, what's out there? Because that to me is the marginal movement in the oil price from here.
Well, as you know, for the past decade, we really relied on U.S. growth, and the U.S. is not growing. And that's super significant in natural gas markets right now. We're somewhat pondering whether Bitcoin mining may be affecting the U.S. gas production numbers. But U.S. natural gas, as you know, is up at $9 per MMBTU. And I was discussing it with a major client today, and he was asking, do you seriously think we could go to $20 per MMBTU? Most brokers will be using a forecast for next year of like $4. So, there is risk, enormous risk to the upside in all these commodity markets. And we're just not seeing much sign of demand destruction. Again, further to your comments about Walmart, et cetera, really, we're not seeing significant oil demand destruction.
So the biggest, the key thing that he is talking about is that we don't have U.S. growth. We have not been developing near as much oil and gas as we have in the past. We had the shale revolution in 2012. We spent billions and billions of dollars on developing oil. We had a president that was pro-oil. Even Obama was pro-oil and gas. That's when the shale revolution began. And then the new administration has stifled the oil and gas revolution, and now we're having to beg Saudi Arabia for oil and gas. Okay, and so I want to go over a few articles here. Right now, oil prices are WTI crude is trading at $120 per barrel. Brent crude $121 a barrel. Goldman now sees oil hitting $140 a barrel this summer. Goldman Sachs this week raised its price target for Brent crude to $140 a barrel from $125 per barrel, citing unresolved structural shortages. After that brief period of a bounce, however, is ending already. The analyst also noted in a note, as Chinese demand is already recovering. On the other hand, Russian oil production could fall by another 500,000 barrels daily, according to Courvalin. According to the authors of the note, Brent crude would need to average $135 per barrel in the next 12 months, beginning July, for global stocks of the commodity to recover to normal levels by the end of 2023, Bloomberg reported. As a result, the global oil market remains in a structural deficit and would need much higher prices to regain its bounce, according to the investment bank. Just how serious this structural deficit appears to be was made very clear last week when, following OPEC's decision to add more barrels to its monthly production boost, over 200,000 barrels a day, more barrels, oil prices rose rather than falling. Okay. One reason for this market reaction was the fact that few OPEC members actually have the spare capacity to increase the production by more than they are currently pumping, with several large members struggling to hit their current quotas, let alone boost them. Another was that demand indeed appears to still be strong despite the rally in prices, suggesting, as Goldman's Courvalin noted, that prices need to go higher in order to start affecting demand in any meaningful way. Okay. And so here's what you need to understand. We were expecting demand destruction this summer due to these higher energy prices, higher oil prices. Well, gasoline oil stocks send the message that we're driving more than ever, okay? And these high oil prices are not affecting us, okay? And the other thing here is we don't have spare capacity. Spare capacity simply means we have the ability to produce more oil than what we're producing right now. America does not have spare capacity. We are peaked at production, okay? We've dropped 2 million barrels a day, and that is the most we can produce right now. The only people that have spare capacity, UAE, Saudi Arabia, and Venezuela, I believe. And so they're the only ones with spare capacity, okay? We do not have the ability to increase oil output, okay? And that's a major issue right now. And if we started drilling like crazy in America, it would take about a year to really see a significant increase in oil production, okay? Oil slips as lockdowns return to parts of Shanghai. And so they were expecting oil to go up much higher because all of the lockdowns in China and Shanghai is being lifted. But there were some lockdowns that increased in Shanghai. What it says to us, we're at $121 a barrel, and there's still some major lockdowns going on. Imagine when those Shanghai lockdowns lift, okay? And so here's a article here, 3 reasons high oil prices are here to stay. If Chinese demand comes roaring back after lockdowns and Russia continues to see production drop, then a retest of the high 139 seen earlier in this year is not beyond the realms of possibility, he said. The European Union on Friday formally adopted its oil embargo, part of a 6 package of sanctions imposed on Moscow over its invasion of Ukraine. Most EU countries now have 6 months to phase out imports of Russian crude and 8 months for all other oil products. Okay. Insufficient alternatives. Last year, Russia accounted for 14% of global oil supply, according to the International Energy Agency, and the West sanctions on Russia are already creating a significant gap in the market. Russia shut off nearly 1 million barrels per day of oil output in April, and this could reach about 3 million barrels per day during the latter half of 2022, according to the IEA. The IEA predicts that global oil production, excluding Russia, could rise by more than 3 million barrels a day for the rest of this year, balancing out the impact of sanctions. But Smith thinks this could be difficult to achieve. Even before the war in Ukraine, he said oil producers winding down investment in production as they pivoted towards renewable energy, and OPEC has its limits, okay? And that's a big issue here. We've been pivoting towards renewable energy versus focusing on oil and gas, which is the only thing that is energizing the world, okay? OPEC is already struggling to keep pace with the current deal. Even core OPEC members such as Saudi Arabia, UAE, and Kuwait exported considerably less last month than in April, he said. Giovanni Stivavo, strategist at the investment bank UBS, said in a Thursday note that many OPEC Plus member states have already hit their capacity limits, okay? Mr. Smith said that he doesn't expect demand in China to come roaring back because of its phased approaching to lifting restrictions. But the biggest bearish influence on prices have been eliminated, hence once more reason to expect to see prices supported around current levels going forward, he said. Demand for fuel in the United States has also proven fairly resilient despite eye-watering prices, okay? Now, just look at all this news right here. If you look, I looked at Google News here. Goldman, $140 oil. Goldman, both a U.S. oil hitting $140. I mean, you look at $150 oil. All the news is saying that get ready for high energy prices. I've never seen anything like it. Oil prices could go parabolic, putting global economy in critical situations, says Trafigura chief. That's Jeremy Weir, who heads up Trafigura, one of the world's largest commodity traders, sounding the alarm bell. JP Morgan Chase and co-CEO Jamie Dimon last week warned of a potential economic hurricane. Wars, Dimon said, have unintended consequences, and this happens to be within the commodity markets of the world, wheat, oil, gas, stuff like that, which in my view will continue. We're not taking the proper actions to protect Europe from what's going to happen in oil in the short run, and we're not taking the proper actions to protect you all. And almost has to go up in price. A parabolic move would be one in which prices accelerate exponentially to the upside. We're told the conference that oil prices were highly likely to hit $150 oil a barrel or more in coming months as the market wrestles with strains on supply chains as Russia attempts to shift oil exports away from Europe, the report said. If we see very high energy prices for a period of time, we will eventually see demand destruction. We're said it will be problematic to sustain these levels and continue global growth. Now, there's many people that disagree that high oil prices are going to stifle oil demand. Here's one gentleman that agrees with what I'm saying.
Marko Kolanovic is a chief global market strategist and co-head of global research at JP Morgan. He joins us on the Fast Line. Marko, welcome back to Fast Money.
Thank you, Melissa. Good to be back.
So you like energy still, it's your top trade, and you think oil can go to 150 and it wouldn't be a problem?
So we published a few months back that we think consumer can handle oil 130, 135 because we had that back in 2010 to 2014. So inflation adjusted, that was basically the level. So we think consumer can handle that. Now, we do think there could be some potential further spikes in oil, especially given what we have a situation in Europe and a war. So we wouldn't be surprised.
So here's the deal. There's many people that agree with Marko that we can handle, America can handle, the world can handle these high energy prices, okay, and continue to sustain the oil demand. OPEC has an incredible research team, and they're expecting by the last quarter of this year to be at over 102 million barrel a day demand. That is an increase of about 2 million barrels a day. Okay, here's why oil prices aren't coming down anytime soon and why OPEC can't stop the climb. Okay, the challenge has been that a lot of the OPEC countries have been authorized to ramp up oil production, but they haven't been able to meet their previous production quotas. In particular, smaller OPEC plus countries have been missing their quotas in recent months, leaving the group roughly 2.6 million barrels a day below its goal output, S&P Global said. The problem is that when OPEC slashed production after the pandemic initially sent demand crashing, investment also fell off, facilities weren't maintained very well. That has made ramping up output more difficult. In addition, top OPEC members exported 900,000 barrels a day, fewer barrels in May versus February. Matt Smith, lead oil analyst of Kepler, told Insider, even if energy leaders Saudi Arabia and Kuwait ramp up production, they will use much of those barrels domestically as they typically do during summer months, he said. So OPEC may be talking about higher production, but the likelihood of those barrels hitting the market via exports is pretty unlikely. All this adds further strain to the IEA's forecast that the world will be without 3 million barrels a day from Russia soon, which has created a geopolitical premium, according to Thummel. Okay. With little help coming from the supply side, the demand side will add extra upward pressure to oil prices too. Bank of America expect prices to hit $140 a barrel, and global commodities trader Trafigura predicts $150 oil. Once China fully curbs its strict COVID policies, demand will soar even higher, meaning oil prices are still nowhere near their peak. Suhaili, the United Arab Emirates energy minister, said Wednesday. Okay. Some forecasts say prices could hit $150 a barrel, and I think that's a possibility this summer. Thummel said, but once you get more oil production, then we'll see some relief. And I do believe longer term oil prices will come down to more reasonable levels. Smith, however, isn't certain that oil markets will see relief and said the main way prices could fall is if demand destruction occurs. Unlike 2008, the crisis now is driven by dwindling global supplies. We have Russian barrels coming off the market, OPEC struggling to increase production, the U.S. unable to increase production. If the supply side is unable to bring prices down, we have to look to demand. Okay. And so the only option here is to lower demand, and demand is increasing. Okay. Shrinking spare capacity will only send oil prices higher. When OPEC Plus agreed to boost its monthly production growth target from 432,000 barrels a day to 640,000 Last week, many politicians in Europe, in the White House, across the Atlantic, must have breathed a sigh of relief, but it wasn't a lengthy relief. Following OPEC Plus announcement, oil prices should have dropped, but they didn't. Prices rose. And this wasn't just because the increase in target production growth could remain on paper only. It was because of spare capacity as well. That's the world's spare oil production capacity is quite tight, has been known for a while now. There have been warnings that underinvestment in new oil exploration in large part are a result of the investor shift to ESG opportunities and government policies discouraging more investment in oil will lead to lower spare capacity. Yet these warnings remain largely unheeded. Okay. And so here's the problem we have, guys. We have an administration in place that's telling the world we need to transition from fossil fuels to green. Green is not ready for the transition, but everybody somehow believes that we have enough oil and that this is just corporate greed. They're just making a lot of money, but we're sounding the alarm bells. We don't have spare capacity. We don't have enough oil. OPEC keeps saying, hey, we're going to increase oil output, but they're not. Okay. I truly believe that they don't have the spare capacity that they're making the world believe. Okay. And so we've got a problem here, guys. We have an administration that's not willing to admit that we need more fossil fuels. He is making moves, trying to set up meetings with Saudi Arabia, Venezuela, Iran, removing sanctions from Iran and doing all of these things. But at the end of the day, he's not coming around saying, hey, listen, we need to remove all the red tape and we need to drill like we've never drilled before, but that's not happening. And the shell industry is hurting right now. And so right now they spent billions and billions of dollars on wells that they drilled from 2012 to 2020. And they are just reaping the benefits of that right now. They're taking in a tremendous amount of profits. So why use those profits to develop when all that's going to do is reduce the price of oil? So they're selling less for more, guys. And that's their strategy right now. Okay. OPEC Plus fails to meet output target once again. And so I've already discussed that. So here's the deal, guys. There's a lot of things going on. And I want to throw something out there that is not being discussed right now. Now, here's something you need to understand. OPEC Plus is simply OPEC, and the plus means Russia. The only reason why OPEC, Saudi Arabia, and Russia came together is because they wanted to take out U.S. shale. Now, because of U.S. shale, OPEC could not control oil prices anymore. Okay. During the time of the shale revolution, we were producing so much oil, it wouldn't have mattered if Saudi Arabia increased their oil output, or forgive me, it wouldn't have mattered if they curbed oil production, because all that would do, it would fuel the shale revolution even more. They were drilling so much oil that OPEC could not keep up. And so if OPEC curbed production during the shale revolution, all that would have done is increase shale output. And all that would do is America would continue to take market share, oil and gas market share. And so what they did, OPEC strategized and they said, okay, we're not going to curb production and we're going to allow oil prices to drop to take out U.S. shale. Okay. And then later, Russia and Saudi Arabia, when shale was on the ropes because of demand destruction due to COVID, which was not major demand destruction. It dropped about 10 million a day. But because of that, it put shale on the ropes. Shale was already on the ropes because they were not profitable anymore, because all the wells that they were developing weren't near as profitable as the easy to get to oil. Okay. And they were spending too much to develop, and oil needed to be around $80, $90 a barrel in order for them to make a profit. They can't profit at 50 something dollars a barrel. And that's what it averaged under Trump. And so shale was already on the ropes, and then you had COVID kick in. And so Russia and Saudi Arabia got together and say, hey, how are we going to take out U.S. shale? Because they are still in our market share. They are keeping oil prices down. We need oil prices back to $80, $90 a barrel, the way it was under Bush, $150 a barrel, $140 a barrel. And so what they did was they decided to flood the markets with oil. Russia and Saudi Arabia decided to pump as much oil into the economy as possible, causing oil prices to drop down to as low as $35 a barrel. Okay. And then fast forward, Russia and Saudi Arabia agreed to curb production, forming OPEC plus. Okay. And so the only reason why Russia and Saudi Arabia formed this alliance was to come against America. Okay. And the reason why they came against America is because Saudi Arabia would have never came against America. I mean, America has made Saudi Arabia very rich, and we protected their oil fields. Okay, and they agreed to sell their oil in U.S. currency, and we agreed to protect their assets. Well, Trump came in office and said, "Hey, we don't need your oil anymore. In fact, we're going to take our armies out of there." And so it made them naked to the Houthi rebels. And so that formed an alliance between Russia and Saudi Arabia. And so they agreed to curb production together. And so in this agreement, they reduced oil output by 10 million barrels a day to soften the hit of COVID. Oil, what did oil do? It climbed. Today we're at $120 a barrel. Okay. Now Russia is being sanctioned. Now Russia is getting beat up because they are bombing Ukraine. Okay. Now, how do you think Russia feels with the fact that America is trying to cozy up to Saudi Arabia? Saudi Arabia wants America because A, they want to sell oil to them, and two, they want to be protected from the Houthi rebels. They need America. They need America more than Russia. Okay. And so Russia's out of play. They're being sanctioned. And so here's Russia being sanctioned. They're not able to sell near as much oil. And the oil that they are selling, they're selling it for a major discount. All the while Saudi Arabia could produce as much oil as they want and sell it at a premium. Now, I'm not saying this is going to happen, but think with me for a second. Russia is desperate at this point, and the only way to fund this Ukraine war and this Syrian war and to fund his economy is with oil. But the cards, if you look at the path he's going on, he's not going to remain in power considering the situation that he's being sanctioned. And so he has only one option. The Houthi rebels have already been dropping bombs in Saudi Arabia on key oil facilities. I would not be surprised if Russia turned up the heat on Saudi Arabia, dropped some major bombs in the Middle East, particularly Saudi Arabia, and destroying their oil fields. We would be forced to go to Russia, Europe, America, the rest of the world, China, India, and go to Russia begging for oil, keeping them in power. Now, some of you guys are like, okay, Sean, I seriously doubt that's going to happen. Well, did you think that Russia was going to bomb Ukraine? Hey, Ukraine, do not side with NATO. If you do, we're going to drop bombs. Nobody believed him. He put all his troops on the border of Ukraine, and then he pulled them out. And we were like, see, he was bluffing. Then he did it again, and we thought he's just going to do the same thing. And then he dropped bombs, killing thousands and thousands of people. The whole world hasn't even sanctioned Putin yet. And we're at $120 a barrel. That's how important his oil is, okay? But it's only a matter of time until Europe it's going to take about 6 months to completely phase out Russian oil. And if we're at $120 oil now, imagine what's going to happen in 6 months, guys, okay? And the world, it's proven that we could afford these high energy prices. The world still turns. We're still driving. We have proven that green technology cannot replace oil and gas. We have proven that we have been foolish about not developing oil and gas. And so is this a prediction? Maybe, I don't know. But I could see Russia using the Houthi rebels, or maybe some sort of, who knows? I don't know. I'm not in military. I don't know. But imagine if Russia drops a bomb in Saudi Arabia, I mean, what other option does he have? What other option does he have? Does he just wait for his economy to crumble? I mean, because he's not going to be able to sell this oil. And the closer that America gets to Saudi Arabia, and the fact that America is removing sanctions from Iran. And then they have the Paris Accord. They have and they're going to allow Saudi Arabia to do things under the Biden administration that Trump would never allow. And so Iran is not as desperate to have a relationship with Russia anymore. And so his foothold with Iran and Saudi Arabia is dwindling by the second. In fact, people are pulling away from Russia because Russia has got a major black eye. And they are being sanctioned. It's only a matter of time until Russia fails. I mean, the whole world is coming against Russia. So they only have one option here, to take out one of the major OPEC members. And Saudi Arabia is the biggest. And Russia has good reason to come against Saudi Arabia. Their relations are fragile. This is a slap to Russian faces with the fact that Russia has helped Saudi Arabia, has helped Iran, and now they're starting to cozy up to America. And in Saudi Arabia, the kingpins of Saudi Arabia, they're making so much money right now. And Russia is taking the heat for all of this, and Saudi Arabia is getting all the benefits? I don't think so. I think Putin's pissed about this. And from what I understand, Putin has cancer. I mean, a man that has cancer, a man that is undergoing treatments, chemotherapy, it makes him crazy. I mean, he's already crazy enough to drop bombs in Ukraine. I can't imagine what else is up this man's sleeve. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. If you're interested in investing in oil and gas, please look at my description below. You could feel free to call me or feel free to click the link and fill out the form. Love to chat with you. Thanks.